Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Let's talk today about Roth IRA conversions. 'Tis the season to be looking at that. Actually, it's really always the season to be looking at it. But a lot of times people will be looking at it more this time of year because we are recording this closer to the end of the calendar year. So I want to talk about Roth conversions and also steal an analogy from someone. I saw this posted online by a gentleman named Matthew Jarvis, who we've had on this podcast before. So Matthew, if you are listening, thank you. I'm stealing this from you because I think it's helpful to pull ourselves out of the retirement world and use kind of a real world example to illustrate Roth conversions and talk a little bit about how people think about this incorrectly sometimes and what we should really be focusing on. When we talk about Roth conversions, if you don't know what I'm talking about, let's go back to some previous episodes and listen to those. But in short, we're talking about moving money from a traditional IRA to a Roth IRA. When you do that, you pay taxes on whatever money you're moving from traditional to Roth. But then once it gets in Roth IRA, it's never taxed ever again. So the benefit is in a traditional IRA, you get a tax deduction for putting money in there, but it gets taxed whenever you take it out. In a Roth IRA, there is no tax deduction when you put the money in, but it grows completely tax-free forever. The idea is when we get into retirement, there are certain points at which we might want to move money from the traditional IRA over to the Roth, pay the taxes now, and know that we're never going to be taxed later. And we want to pay the taxes now if we can do so at lower tax rates. So here's the analogy. That was kind of the background. Here's the analogy. You are a farmer. You have 4 bags of seed to plant 4 fields. And for those of you who are farmers, I'm keeping this simple. So each bag of seed can plant 1 field. You got 4 total. 4 bags of seed, 4 fields. Government comes along and says, you can either pay us a bag of seed now, or you can pay us the output of a field later. Which one's better? The answer is it doesn't matter, because either way, you end up with 3 fields. If you give the government a bag of seed now, you only have 3 bags of seed left to therefore grow 3 fields. Even if you used all 4 bags of seed and gave the government one of the fields at the end, you still have 3 fields. The same 25% tax on the beginning or the end. Now, why do I bring that up? Because it didn't matter in this scenario whether you got taxed up front or whether you got taxed at the end, because the tax rates were the same. Let's take this back to Roth IRA conversions now. Now that we understand this math of the percentage tax didn't matter, the length of time didn't matter. Because the same things apply when we talk about Roth IRA conversions. A lot of times we'll hear, well, it only makes sense to do a Roth IRA conversion if you can let it grow for X number of years. No, it doesn't. That is not a determining factor for Roth IRA conversions. I'm going to go over some nuances here at the end, so those who are into tax planning don't go crazy yet. But overall, the length of time does not matter. And if the tax rates are the same, it does not matter. What you are trying to do with Roth IRA conversions is pay taxes at a lower rate now than you will or than you might in the future, because then you have a tax benefit. If it's 25% now and 25% later, doesn't matter. Mathematically, you wind up with the same thing, whether it was taxed early or taxed at the end. It's the same, mathematically the same, just like we went through in that farming example. The difference comes in when you're able to pay now at lower tax rates than you will or than you potentially will in the future. That is the main benefit. Length of time doesn't matter. If it's the same tax rate, doesn't matter. We're trying to take advantage of lower tax rates now. That is the whole point. Now, on to some nuances. There are additional reasons beyond this to potentially do Roth IRA conversions. So, to go back to our example where the tax rates are the same, you're going to wind up with the same balance at the end, whether you're taxed now or taxed later. So you say, well, what's the difference? Well, if you can get the money into a Roth, even if you wind up with the same tax impacts, there are other pieces that can make the conversion advantageous. You might be able to do a little bit more tax planning on where you take the money from in traditional versus Roth, and therefore you get to other income limits, which provide additional deductions. And we've seen this with the new bill that came out earlier this year, where there's now extra senior deductions, and there's all sorts of calculations that are based on your level of income. So if you have more in your Roth than you would have if you didn't do conversions, that means you have less than the traditional, and you can better pick and choose where you land from an income perspective. So there, even if the tax rates were the same beginning and end, there are other benefits that you can gain from a tax perspective by being able to select your income a little bit more and get those extra deductions or extra items. Additionally, there's a risk that if you're a couple, that one of you passes away. The unfortunate thing in those scenarios, outside of just one person passing away, which is awful enough, from a tax perspective, you shift in that following year, you shift from married filing jointly to single filing. And what that does is it shifts the tax brackets to much less advantageous way. So you might lose one of the person's social security. So you say, well, that income comes off. Well, you're still going to have all the other required distributions, all the other income still coming in, which is good from a personal finance perspective. From a tax perspective, it stinks. You wind up getting taxed at higher rates under single than you would at married filing jointly. So again, another reason to do Roth IRA conversions is you remove some of that risk if one of the couple happens to die earlier. So point being, we hear a lot about, well, gee, it only makes sense to do a Roth conversion if you have X number of years over which it can grow. That's not true. Flat out not true. And if the tax rates on the beginning and end are the same, mathematically, it works out to where it doesn't matter. Except for all these nuances we went over, there are other benefits that can be attained by getting it over into a Roth IRA. Does that mean everybody should be doing Roth IRA conversions? No, that is not the case. You really have to look at it on an individual planning basis, because the whole point of all of this is that we are trying to reduce the taxes that we pay in total over the entire time of your retirement. That's what we're trying to plan for. So when you hear crazy stuff, like I said, like the amount of time in the Roth IRA doesn't matter. If the rates are the same at the beginning and the end, it doesn't matter except for these nuances, which are important. You'll hear a lot of things that just aren't correct. It has to be individualized planning to what you have and what your taxes will be. So that way we can reduce taxes over the entirety of the rest of your life.